The FOMC is now behind us, and we saw gold breach that 1150 level this Thursday. Where is the metal headed from here? We have II Traders Bill Baruch joining us from the CME. Bill, thanks for being with us.
Thanks for having me on again.
Well, let's talk about the move we are seeing in gold. Is the metal moving higher mainly on the Dovish minutes released yesterday, or is there something else at play?
Really, this is on the minutes. This is short covering. I was on here a couple weeks ago talking about the commercials. Commercials have gone neutral, and they still are, but the speculators who have gone net short for the first time really ever, and again, it's an event to see them go more short than the commercials. Those shorts, which is mostly the retail investor and the speculators, are now having to cover to buy. So they're buying, and that volume is coming into the market and helping the market move higher. And that is on the Dovish Fed minutes, which is really the catalyst.
Well, Bill, let me ask you. That said, what levels are you now looking at for gold?
Well, our next resistance is this about 1149 to 1153 area. However, we told our clients this morning that you can expect a move just above 1160, which is a big retracement level, and as well as a trend line. It's a inverse part of the trend line that was broken a couple months ago, and retesting that if the data missed this morning. However, existing home sales beat expectations and Philly Fed beat expectations. So that right there is going to kind of keep a little bit of headwind in gold at the moment, and it's stalling at that 1149, 1153 area. Truly, if data continues to miss, we were looking at 1190. Right around there, you have the 200-day moving average as well as the halfway retracement on the year. So those are three levels that we're watching very closely.
And what about the dollar, Bill? We saw the index dip yesterday on the FOMC news. Do you think the dollar's momentum is coming to an end?
You know, it kind of is at the moment. I mean, it's been stalling out about this 98 area. 98.29, 98.43 and a half has been our major three-star resistance in the dollar. It has not been able to go above that since April. So yeah, it has stalled out. 96.17 is the 50% retracement on this 50-year downtrend. So the market has been like a magnet to this, really all year long. And then 95.80 is the support more in the near term. If we violate and close below those levels, look for the dollar to go lower, and then look for silver and gold to go higher on a weaker dollar.
Well, let's talk silver now, which saw, as you put it, a violent sell-off earlier in the week. How are you seeing the metal now?
You know, right now, silver is above the 50-day moving average, and I've always said that if you look at that 50-day moving average, and if it stays above or below it for an extended period of time, and we're starting to close above it, so we think this can be a little bit of a catalyst to help silver move. Silver's been very depressed. It's had some violent selling, which you just mentioned, and again, above that 50-day moving average is going to help. However, there's a big retracement level and resistance coming in about 1570. And 1570 is going to be the next headwind. A close above there is needed to get a short covering rally in silver.
All right, Bill, and to wrap, markets are trading thin right now. So what advice do you give your clients on how to trade this gold market right now?
Listen, you always have to manage risk. You know, traders can be right 40 to 45% of the time, and as long as they manage risk properly, you're going to make money. So you have to manage risk. You have to define your risk. Whether you're comfortable with just using options to define that, or using covered futures, buying gold with a long put, or selling gold with a long call to protect yourself. You know, use a stop. You need to be able to manage your risk and understand what's on the table. But I'll leave you with this: the most important thing is not the entry point. It's the exit point. I've seen so many traders have a good trade on and be making money, but they don't know when they're going to get out. So define your exit point before you actually get into the trade.
Good thoughts from you today, Bill. Thanks so much for joining us.
You're welcome. Thanks a lot.
And thanks for watching Kitco's Gold Report. We'll see you tomorrow.